Live from the Motor City, this is the Pre-Market Prep Daily Radio Show with your hosts, Joel Elconin and Dennis Dick.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have two guests on the line, both from Alexander Alternative Capital. We have Michael Corcelli. He is a Chief Investment Officer, and Ted Isaac. He's Head of Research. Michael, how you doing this morning?
I'm doing well, Joel. How about yourself?
Good. And Ted, Head of Research, thanks for joining us as well.
You're welcome. It's great to be on.
Michael, first just talk a little bit about your firm, Alexander Alternative Capital, global macro hedge fund that was ranked in the 96th percentile of 973 hedge funds. How did you rack up such a good performance?
Well, that's actually being very opportunistic in the way that we deploy capital. We're macro top-down to identify the trends, and then long-short equity in our expression. We also buy and sell options as well.
Okay, take advantage of all those options that I'm buying, selling the premium. Let's move on to the energy sector. Big focus on the crude oil market this year. Really fell off a cliff. Got down to $45 in the contract, the front month contract. A lot of people calling for the commercials to flush out there and send us down to the 30s or even 20s. But we've staged a recovery now, and now we're kind of pausing. Were you able to take advantage of both sides of the market on the down move and also on the recent rally?
Our view in the crude oil markets is we like to be directionless with regards to the underlying commodity. However, our view is also built around the belief that oil is heading lower going forward. We have a target price for crude at $33 a contract. So to answer your question, we did take advantage of the bounce, but we took advantage of it more from being a toll booth rather than taking directional risk on the underlying commodity.
Okay, and Ted, being head of research, you probably have something to do with that 33 price target. Can you tell us, some of the components that you're using to come up with that price target?
Well, I think fundamentally the reason we have a lower price target also factors in valuation a little bit. I mean, even if you were to argue that oil prices are going to go up, what's really going to happen to the equities in that case? Because it's hard to see oil prices going back up to 80 or 90 or $100 a barrel and being sustained there. So if you're, and then the reason I say that is simply the numbers we all know, the storage numbers and the production from the U.S. and everything going on there and the global production and things like that and consumption. So if oil prices go back up, then these oil companies are going to be able to continue, they're going to be able to continue doing fracking and using all the other new technologies. In addition, they're coming up with better and less expensive ways to develop oil. So people think, oil prices are low, all of this is going to be knocked out of the market, and that is true partially, but it's also true that people keep creating better technology all the way around. So as that happens, cost structures will come down. So the first thing you need to think about is, well, even if oil prices were to go up, what's really going to happen? There's probably a upper limit, and it's probably not sustainable. So people aren't going to necessarily want to get in there and invest for the long term. On the other hand, you still have this situation where all of the capital that's been spent over the last few years is just coming to fruition now, and production levels are still, a lot of production is still coming on stream. A lot of these projects are not going to go away just because oil prices are lower. Perhaps the future capital will be cut, which we see being cut, but you're still, but that's going to take a while for that to come through. So I think, our view is just there's more downside here, realistically, absent some global event.
What about the oil rig count really coming down? We got nearly half as many rigs online. Do you think that they're going to make up for production and other capacities? Because, if the supply is coming down and demand remains the same, what do you think about that? Is that could be a fly in the ointment?
Well, eventually, eventually that can correct. That will helps correct things. I mean, that's the cycle. But I just don't think it happens as quickly as people want it to happen.
Okay, going back to you, Michael.
It's just there's a lot of oil out there, and a lot of people drilling for oil and getting oil, and sure, it will cycles do occur, but it takes longer than people think.
Okay. Michael, going back to you, just touching on the technology sector. We've had some earnings, but no one's paying attention to anyone's earnings more than Apple today. And they've come out, they've done everything right here. The stock got a bump in the pre-market, 136.20. Coming back down here, were you looking, increased buyback, increased dividend, beat on the bottom line, beat on the top line? Everything you would think that would be great, and the stock's up a couple bucks. You're a little bit concerned here.
No, not at all. I heard your bet with the previous guest. I believe that Apple's going to 200 this year, and there's a lot of reasons why I believe that. If you look at the stock, it's at an all-time high. It's not far off of the post-earnings high yesterday of 135, 136. Apple is, everybody has a lot of Apple, and that's really the only concern that I have is it's really a proxy for the entire U.S. economy, the world economy at the size that it's at. But that's the only headwind I see. We did an interview back in November 17th of 2014. It's going to be the first. I said it's going to be the first company with $1 trillion market capitalization, and I believe that will happen in 2015.
Okay. Also, Twitter due to announce earnings coming up. Any thoughts on Twitter? You had that breakout over $50, kind of stalled a little bit, coming back down to that area. Here's a company that's never missed on EPS. What are you looking for out of Twitter?
So Twitter receives over 85% of their revenue based off of mobile. Mobile, as everybody knows, is growing significantly. That's a 2015 story. It's going to overtake, desktop, as far as advertising this year. The speed. I believe Twitter is, one of the best positioned stocks to take advantage of the switch to mobile. They're going to blow out expectations. Very optimistic on Twitter. I do want to get back to Apple for a second.
Sure, go ahead.
If you don't mind. There was just a portion in Apple's in the call yesterday. Tim Cook started to talk about healthcare and some of the research apps that are being used, with the iPhone and potentially the Apple Watch. They have an app called Research Kit, and it's to study like asthma, breast cancer, cardiovascular disease, diabetes, Parkinson's disease. And in the first few weeks, they have over 60,000 iPhone users that have enrolled in this program. The possibilities of being able to develop treatments, new drugs, getting things into stage 1, 2, 3 FDA clinical trials is just, I believe, unprecedented. And things like this allow Apple to start trading to a higher multiple. From where it's at today to trade into the high teens is not outside of the realm of possibilities as well.
Okay, and Ted, going to your research on Apple, are you looking? Do you have any technical levels that traders should keep an eye on, or what's your research focus on?
No, I think Michael's pretty much summed up our views on Apple, and I think the real key here is breakthrough technology, disruptive technology, and Apple keeps coming up with new things. And this medical thing that Michael just talked about is something that you can't really quantify that very well, but fundamentally, all my life experience as a research analyst tells me that that's something that's going to really revolutionize the way people live. And maybe that sounds like a very bold statement, but I really believe that that's the case because they're now expanding into things that are going to just be so fundamental to the way people live day to day, that there's going to be major changes from that. And we can't even envision them at this point. I don't even think Apple can really envision them at this point. But with information combined with people's desire to have better health, combined with medicine and everything else we have going, when that all comes together, then it comes down to a really personal thing where it improves people's life. And so if you're the company that's kind of leading that and spearheading that, then it's the place you should be invested. In terms of all the other fundamentals, earnings, and technical factors, I think those are pretty well known out there in the market. But so that's sort of the foundation of our research.
Okay, Ted. ExxonMobil and Chevron, they're due to announce earnings here. Going with your thesis on the lower crude oil here. Any thoughts? ExxonMobil has been running into some resistance above the $88 level. Any comments on that company?
Well, on ExxonMobil, my comment is that I've always had the same view. For many, many years, I've had the view of Exxon that it's really just a buy and hold, well-run play. Of all the companies I've ever been involved with in my career in energy, they're the most disciplined in terms of their capital and their financial management, and their assets, of course, are really good. They definitely need to improve in some areas. We might see them taking advantage of the situation with acquisitions and things like that. But it's not whether the current price is the right price or not. I don't think Exxon's really a short-term play. I think people that want to invest in Exxon have to say, this is a really well-run company. It's a top oil company. You're going to be a conservative investor that just wants to know your money is being well managed, and then over time you're going to benefit from it.
Yeah,
so
that
how their earnings will turn out will be interesting. They're so well balanced. It's how their earnings will turn out is difficult to know, but they're very integrated, as you know.
So, Joel, we have an expectation of about 84 cents versus consensus of 82, mainly due to the downstream and upstream crack spreads. So they should do a little bit better than expectations when they report earnings.
Okay, going back to the technology sector here, I just wanted to get your thoughts, Michael, on Microsoft. Bad quarter, good quarter. They took it down back in January. Reversal of fortune here, back up at the $48 level. How often do you see a big stock like Mr. Softy, move off 4, 5, 6 points? What's your outlook from here? 48 to 50, or you look for it to give a little bit back?
Microsoft has this new platform, this cloud-based platform, which we actually use at our firm. This Office 365, and it's basically it's a little scary. They haven't worked out all the bugs. We've been frustrated with it in our own personal office, and I'm not saying we're highly tech savvy people, but I believe we're better than most. So it's going to be interesting to watch, how these desktop installations move to the cloud. And Microsoft's got a lot of work to do. We're not, buyers of Microsoft here. Perhaps it's a mistake that we're making. But again, we feel like they're in the middle of a transition. And we don't have enough clarity if they're going to be able to accomplish their goals long term. With Microsoft Office and the Windows-based platform. So we're taking a wait and hold on it. One of the things that we do have a lot of color on is Valero, which reported earnings this morning. Ted, do you want to do a quick just rundown on your thoughts on Valero's earnings and what we see going forward?
Well, I think Valero's earnings came in good. We feel like they're performing pretty much as expected, or maybe a little bit better in our views than what a lot of people thought. The company has a lot of cash. If you look at their dividends and their stock buybacks, then the yield is very attractive on the company. They're very well positioned in this market to do well, just where their assets are and the way they have their logistics set up, and the fact they're able to take assets and put them down into the MLP. Those are all positives. So I think in this time of uncertainty in the oil sector, the refining area in general is a good area to be looking at, and because you don't have quite as much volatility with the crude, and Valero is one of the top companies there, so we definitely are recommending it.
Okay, back to you, Michael. Just overall market thoughts. We hit a new all-time high yesterday in the index. Selling off a little bit today, despite some good numbers by Apple. Any thoughts moving forward here in the market?
Yeah, we're wildly optimistic with regards to equity markets. We believe that they're going to continue to outperform. We also see, some increased volatility on the horizon as people start to respond to a potential rate hike, in September, and that'll work its way into all the different asset classes. So you have to pick your points. You have to focus on, not getting too greedy, and also, not pushing your money in all at once. So, going forward, we see this being a great market, with some turbulence, and by the pullbacks, just make sure that you're not buying them too early.
Okay, Michael Corcelli, Chief Investment Officer for Alexander Alternative Capital, along with their Head of Research, Ted Izat, joining us here on Benzinga's Pre-Market Prep. Gentlemen, thanks a lot for the information. We hope to talk to you again soon.